Warren Buffett has averaged around 20% a year for the past 60 years. Because of that, he's considered the greatest investor alive. And yet, he's still no match for Nancy Pelosi, who made 65% in 2023 and 71% in 2024. And she's not alone. There are many more politicians who did just as well as her, or even better, making them some of the best investors in the world. And that's because these are the same people who vote on the regulations, approve contracts, and set the budgets that will directly affect which companies will win. Because of that, they know which companies are about to benefit even before the market does. In this video, I will show you the 5 stocks that keep showing up in the portfolios of the most powerful people in the US Congress and break down the thesis behind each trade. So let's not waste any time and let's jump right in. Alright, the first stock is none other than Nvidia. In just the past year alone, US politicians bought $11.6 million worth of Nvidia. No other stock even came close. In fact, Trump also recently disclosed that he bought up to $5 million worth of Nvidia. And it's not hard to see why. When it comes to Nvidia, the US government isn't just a regulator, it's also one of their biggest customers. In May 2026, the Pentagon signed contracts to deploy Nvidia AI across its most classified military networks. Meanwhile, Trump signed an executive order naming Nvidia a core partner for national AI infrastructure. Then, that same month, the administration approved Nvidia chip sales to major Chinese companies, unlocking a $50 billion market. Heck, they even flew Jensen Huang via Air Force One to Beijing to announce the deal. But even without the government tailwinds, Nvidia has made itself the operating system of AI. Today, Nvidia controls roughly 80% of the chips that train every major AI model in the world. And every dollar of hyperscaler AI spending still flows mostly through them. In their most recent earnings, Nvidia's revenue grew 65% year over year. Earnings per share grew 67%, all while having an incredible operating margin of around 60%. Their next generation of chips, called Blackwell, is already being ordered faster than they can produce them. And with some analysts projecting that the AI chip market could hit $500 billion by 2028, there's no company other than Nvidia that is better positioned to capture that demand. However, with that being said, while the company's future look rosy, there are still real risks. Export control restrictions can lock them out of entire markets overnight, while competitors are pouring billions into alternatives, which could chip away at Nvidia's dominance over time. On the valuation front, Nvidia had a 10-year historical earnings per share growth rate of around 54%. But even if you used a much more conservative 26% forward growth rate, the stock would still come out at around fair value. That said, given the whole hype on AI, if there's any misses on earnings growth, even if the stock is considered cheap, its multiple could still compress fast. In short, Nvidia is the most politically and fundamentally validated stock on this list. However, the risk isn't the thesis, it is buying a great company at a price that leaves no room for error. Speaking of buying US stocks, great news! Poems has just dropped their US trade commission all the way to 0% for the Cash Plus account. Regardless of how much you have in the account, you'll be paying 0 commission when you trade US stocks, ADRs, and ETFs on top of enjoying 0 settlement fees and 0 platform fees. And when you are not trading, you can park your cash in their US money market funds to earn better returns. If you are new to Poems, you can get up to 1000 SGD in welcome rewards when you sign up now. To qualify, just make sure to opt in to Smart Park during the sign up process. And from there, the rewards will scale depending on how much you fund. For example, if you put in at least $3,000 within 14 days and keep it there for 30 days, you'll get $50 in stock coupons. But if you increase the amounts to $10,000 and keep it there for 30 days, the reward goes up to $200. So if you're interested, you can sign up with my link down below. Moving on, the next stock is Broadcom. In June 2025, Nancy Pelosi made a single bet worth $1 to $5 million on the stock. Trump has also disclosed holdings worth over $580,000. And they are not alone. 29 politicians have also traded this stock over the past 3 years. Here's why. In March 2026, the Pentagon awarded Broadcom a $970 million contract for cloud infrastructure across the Air Force and Space One. Then the administration made Broadcom's VMware software the default platform for every federal agency. And when Broadcom acquired VMware in a $69 billion deal, US regulators let it close without a single antitrust condition. So what does Broadcom do? They build custom AI chips for hyperscalers like Meta and Google. They also own the networking layer that connects AI data centers together. So think of them as another AI chip company. But instead of selling chips to everyone, they engineer them specifically for a handful of the biggest tech companies in the world. In their latest earnings, Broadcom's revenue grew 29% year over year, while EPS grew 28%, all while having an adjusted operating margin of around 42%. Broadcom's moat here is structural. According to analyst estimates, they supply custom AI chips to around 5 out of the 7 largest hyperscalers in the world. These are multi-year core engineering contracts and not one-off chip sales. So once a company like Meta or Google has built an AI architecture with Broadcom, if they wanted to switch out, it would take 3 to 5 years of re-engineering. On top of that, the VMware acquisition means Broadcom now owns the software layer that runs enterprise AI infrastructure. So Broadcom doesn't just build the chip, they also own the entire stack that it runs on, whether it's the custom AI silicon, the networking fabric that connects the servers, or the VMware software layer that manages the whole infrastructure. Looking ahead, hyperscaler AI capex is still ramping up, which means more custom chip contracts for Broadcom. VMware is still being rolled out across enterprise infrastructure, and every new ASIC customer they sign on is essentially guaranteed revenue for years. That said, the main risk here is concentration. Broadcom's ASIC business runs on just a handful of customers. So if Meta or Google decides to switch out, that's a huge chunk of the business gone. On top of that, the VMware acquisition came with a lot of enterprise pushback over aggressive price hikes. And with VMware now contributing close to 35% of Broadcom's total revenue, if that growth ever disappoints, the stock could re-rate fast. Historically, Broadcom had a 10-year EPS growth rate of 19%. But even if you apply the historical rates as a forward assumption for the next 10 years, Broadcom will still come out to be 100% overvalued. That tells you that the market is being pretty optimistic here. In short, Broadcom is a high conviction bet by the very politicians who vote on its contracts. But after such a massive run, the question is how much upside is left. Next up, Netflix. Over the past 1 year, there were 20 overbuy transactions from 6 different politicians, with aggregate activity totaling roughly $1.5 million in purchases. So here's what's going on. In February 2026, Congress was voting on whether to block Netflix's $82.7 billion acquisition bid or allow it to pass through. At the same time, they were also rewriting the sports broadcasting law that directly affects what content deals Netflix can do. These are the same politicians who own the stock, and every call they make has a personal financial consequence. Netflix modes is scale. Every year, they spend $18 billion on content. And if you split that cost across its 325 million customers, you get a per subscriber cost that no new entrants can match without years of losses. That gives Netflix its pricing power. Netflix has raised its prices 4 times since 2022, and even so, the subscriber growth keeps on climbing. Year after year, the business also just keeps growing. In the most recent earnings, Netflix revenue grew 16% year over year, while its operating margins now sits at around 33%. Going forward, Netflix is building multiple new revenue streams on top of an already growing subscriber base. The ad-supported tier is ramping up, with Netflix expecting to double ad revenue each year. They have locked in live sports deal with the NFL and WWE. And with the password sharing crackdown done, Netflix will get revenue growth even without needing to add as many new customers. On the valuation side, Netflix had an EPS growth rate of between 29 to 55% annually. But even if you apply a conservative 20% forward rate, Netflix will still come out to be slightly undervalued. That makes it one of the better value stocks on this list. However, with that being said, Netflix content costs are high and are still rising. Live sports rights are expensive and loss leading. So if the growth ever disappoints, the stock price could get re-rated quickly. Alright, the next stock on this list is Palantir. In January 2026, Trump personally bought the stock, and the politicians buying it right alongside him are the exact same people voting on the defense budgets that funds Palantir's contracts. In July 2025, Palantir landed a $10 billion 10-year Army Enterprise Agreement. Then, the Department of Defense raised the ceiling on Palantir's Maven AI contracts by a further $795 million. Meanwhile, ICE awarded Palantir $30 million to build its deportation tracking platform. One of Palantir's biggest moats is its clearance. They hold security clearances that take years to obtain. Without those clearances, no competitor can even get in the door. This gives Palantir access to contracts that are off limits to everyone else. And once an organization is on Palantir, leaving is too costly as they would have to rebuild everything from scratch. The fundamentals back this up. In Q1 2026, Palantir's revenue grew 85% year over year, with adjusted operating margin hitting 60%. Going forward, Palantir is expanding from government agencies into the commercial enterprise market, with the goal of becoming the enterprise system for AI deployments in large organizations. As for its valuation, Palantir had a 3-year EPS growth rate of 132% annually. But if you assume a much more conservative growth rate of 30%, Palantir would be overvalued by over 130%. In short, Palantir has the most explicit conflict of interest story on this list. The thesis is real, but its valuation demands perfection. So if we ever see any slowdown in its commercial growth, the stock's multiple could compress fast. Last but not least, we have Intel. In 2024, a Reddit user put his grandmother's 700k inheritance into Intel. Back then, everyone called him crazy. But today, his nana is smiling because so far, that 700k had nearly tripled to $1.89 million. So what is Intel's story? Prior to 2025, the stock had fallen from $60+ to under $20. But then the US government stepped in. Through the CHIPS Act, the US government now owns 10% of Intel, and Trump also personally bought the stock on top of that. That means every Intel-related policy decision, whether it is the chip export rules, chip act disbursement, or defense contracts, is now made by an administration with a direct financial stake in the outcome. Or in other words, the Trump administration is now the shareholder, the regulator, and also the customer of Intel. So while Intel has been steadily losing the CPU market share to AMD and its revenue has stayed flat, the bet here is on its foundry business. If their 18A process node delivers, Intel could become one of the only 2 companies capable of fabricating chips at sub 2 nanometers scale, alongside TSMC. However, on the valuation front, even if we apply a generous 35% forward earnings per share growth rate, Intel will still come out to be over 120% overvalued. This means that the stock run had already priced in a turnaround story that hasn't really happened yet. In short, Intel was a dead stock that has been brought back to life by the government. But the turnaround story is still yet to be seen. So that was the 5 stocks that US politicians keep buying. If you found this useful, hit like and subscribe, and I will see you in the next one.